So big banks have been getting a pretty rough rap for generations now and being skimpy with their credit limits, especially their starting credit limits, even their approvals, to be honest. This is shifting in the last few years since more information is out. More people are learning how to play the game when it comes to building their credit out and relationship banking to get access to, credit cards from bigger issuers and better limits with bigger issuers. But overall, broadly speaking, honestly, it's still pretty tough for the majority of people to get into these larger institutions and walk in the door and able to get quality credit cards at high limits early. So I'm going to teach you in this video how that goes, how that works, so you can learn how to play that game and not just rely on these credit unions and smaller banks to get these higher limits. At the end of the day, let's be completely honest. These bigger banks are harder, but they have significantly better credit card products. So you still eventually want to grow into these larger institutions. They serve a purpose. We're going to cover that in this video. I'm going to break down why there's a difference, and I'm going to teach you how to navigate that difference to get Navy Federal type limits with these bigger institutions. This is JP from Blueprint for Prosperity. To all my pioneers, welcome back. To all my new viewers, welcome in. We're going to get right into the content. So when you're dealing with the business model between a credit union and a bigger institution, a big for-profit institution, it's two different beasts when it comes down to who they're serving, their underwriting, the type of risk they're willing to take, so on and so forth. You have to understand something about Navy Federal and some of these other credit unions that are getting so much attention for their high limits and easy approvals and things of that nature. These credit unions are credit unions. They're not for-profit entities. They are able to take a lot of the money they make and reinvest it back into their members. That allows them to, again, reinvest back into their members. It allows them the ability to take different level of risk. It allows them to assess their members one by one more than a bigger institution that has a more cookie cutter, broader approach to their client base, especially if you're not at a certain net worth or a certain deposit relationship. These things are different. The next major game changer is because they're credit unions versus bigger for-profit institutions, you are making a bigger impact with less money at a Navy Federal. Even though it's the largest credit union in the world, it's still not a Chase Bank, a Goldman Sachs, a Bank of America, okay? It's still a credit union and it's still relatively small in comparison. So you can go to a Navy Federal or a Penn Fed or SCCU and so on and so forth, Nassau Federal Credit Union. You can go to these credit unions, get yourself in there and, bring a direct deposit of 3 figures a month, maybe $3,000 to $5,000, $7,000. You can do pledge loans with them, savings, break it up into CDs. You can play around and wash around a few $1,000s and maybe a direct deposit and build a relationship with them in 90 to 180 days, 3 to 6 months. It's pretty doable. They're not that big and they're not for profit. So it's just a different business model. These larger institutions we're talking about are dealing with magnitudes more broader customer base, magnitudes higher clientele, and many more high net worth clients that are much more important to them, to be honest. And so that's, whether you agree with that or not, is irrelevant. How you need to play the game is you need to understand relationship banking with these larger institutions is at a totally different scale. If you're not talking about at least a ground floor of $50,000 to $100,000, $25,000, $50,000, $100,000, then you're not really scratching the surface in relationship banking, just to be honest. Now, it does exist below that level with these bigger banks, but they're going to be much smaller perks. It's not going to kick the door open to a $20,000, $30,000 credit card out of the gate unless you have other financials to support it. So with that out of the way, hopefully a better understanding for you. How do you play the game to kick the door down with these larger institutions and not have $50,000 or $100,000 to do so? What you need to do is leverage these smaller institutions and credit unions in the relationship you develop with them. Bigger banks are competitive because they're for-profit institutions. So they are looking to weigh out the risk early on. But if you come to them and you have a robust credit profile and you have one or two or more major, other credit issuers, credit unions, smaller institutions that you have higher limits with, then they're looking at it saying, okay, the risk has been taken already by these institutions and this individual is held up in that scenario. So we're going to match those limits because we're going to assume we have better products. So we're going to give you have a $15,000, $20,000 limit at a Navy Federal or a Penn Fed, a First Tech, whatever the case may be. Chase, Goldman Sachs, Bank of America, Citi. They're going to look at that and say, cool, good. Now we know that you seem to have managed this level of limit with another institution that is credible still. But we are going to compete, give you a similar, maybe even a higher limit, and we're going to assume we have a better product. In many cases, they do. I mean, to be completely honest, you cannot compare Navy Federal's cards to Chase Bank's credit cards. In most cases, it's just not fair comparison. And that same thing goes for, Citi, American Express, Capital One. Like these issuers are largely, because they're for profit, able to create better products in different ways. Navy Federal's products are great, and their credit cards are okay. But at the end of the day, what makes their credit cards attractive? The higher limits. So what you want to do is take your smaller deposits in your initial relationship, take it where it's going to get treated the best, Navy Federal, Penn Fed, etc. Build up that relationship there, get those high limits, get those $15,000, $20,000, $25,000 limits. Get maybe one or two of those going, because with those credit unions, you can get that accomplished in 90 days to 180 days. Like I keep saying, 3 to 6 months. So do it at one or two of those institutions, and then take your relationship over to a Chase Bank, a Goldman Sachs, a bank, a Citigroup, whatever the case may be. Bring it to these larger institutions and give it a little time. Give it 90 days or so, or whatever. You can go and initially apply. I'm not saying you can't get approved, but you want to get in their system. Get some data points within their system so they get familiar. When they pull your credit profile, or what they're doing a lot more now, these bigger institutions are providing you these credit scoring segments of their apps and their online platforms, and they're using that same data to look into you without a hard pull. So when you go in, for instance, like a Chase Bank, they're using their credit journey to gauge whether or not they can pre-approve you, believe it or not. And many other larger banks are doing the same thing. They're providing this and using it for data. They're trading off with you. They're giving you access to your credit information while consuming that same information to determine if you're a good borrower or a good future client to extend credit to. So get your data points with them. And then once they look in and peep in under the hood and see, oh, okay, you've already navigated $15,000, $20,000, $25,000 for a little while now. Cool, we're willing to get in that game now, get our feet wet, give you a similar limit, maybe a little lower or a match or a little above, depending on your overall financials, and take that gamble with you, because the risk is started out with this other institution. So it's less risky for us, but we're going to compete though. We're competitive. So we're going to look to give you a better product with a similar limit. They're not trying to join in the family and give you a bunch of limits. The goal is to outmuscle those other credit unions with a better product and entice you to shift your spending over to them. So that's the major way you want to play that game. And I wanted to bring that to you guys, because these bigger banks are not the devil. You learn how to play the game properly and learn how to navigate their systems. They have phenomenal products and services as well. You want in on these ecosystems. So all my pioneers out there, comment down below. Let me know if you've played this game successfully or not, or what your strategy is, or what you're going to take from the strategy I laid out to exercise this. If you have questions, leave them in the comment section below. You want to support the channel? I actually have a couple of these sizable lenders and a smaller fintech lender. Links in the description, referral links that'll get you a great welcome bonus or some extra cash without you having to spend a dime, and still support this channel so this channel can keep supporting you. Other than that, to all my pioneers out there, I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.